Hey everyone, I wanted to take a minute to opine on what's going on after a red day on Wednesday. It felt different than what the scoreboard shows and different to what the action happened intraday. The day started out great pre-open. We were up 30 points or whatever on the S&P, and then they opened really down, and then they recovered, and they had all the chances in the world to just take it to the next level. The Bulls did, but they chose to let it go. I didn't see the Bears press it. The Bulls just let it go twice. They had opportunities to bounce, and then what's worse is they finished the day on the absolute very worst case scenario. I say this because the small caps went from minus 1% to plus 1% to red to green again, and then closed at the very low and made new lows at the close. Fear made new highs at the close. So the worst case outcome for Wednesday happened in favor of the Bears. So for the last few weeks, I've focused on one word: control. I don't care what the scoreboard is. I want to know who's in control of the price action, because that allows me to predict whether they're going to buy the dips or sell the pops. Sell the rips versus buy the dip meme. So this is the S&P on a 2-hour chart. It looks hideous, right? Bad day. But if I go to a daily chart, and if I show you a daily chart, sorry about that. If I show you a daily chart and I say this is a stock whatever, and tell me who's in control of this chart, it's the slam dunk answer is the bulls are in control. Higher highs, higher lows, ascending channel. Every dip is getting bought. We were lower just a few days ago. The only difference now is that we're having more frequent red days, or so it feels, which is fine. I have no idea what they're saying on CNBC. I can just imagine. Don't listen to them. They don't know anything. They propagate whatever they want to, and they sometimes create self-fulfilling prophecies. But what's going on with rates, what's going on with the bond market, the only thing that really matters is the commitment of the government. And so far, they're committed to reflation. The Federal Reserve is pumping $1.4 trillion. Every month, they buy $120 billion worth of assets in the form of bonds. So if they decide to pull back on it, that means they renege on their offer of saying we're supportive of the government of the economy. And you remember taper tantrum from Ben Bernanke? Well, the markets won't like that. But every indication from them yakking is no. They're committed. They said they will ignore inflation. They'll ignore everything else. So now the fear is that yields are rising. So if that's the case, then their hands might be forced. But nobody's saying that that's a possibility. So for now, the price action is all that matters to me. And control, yes, on the daily chart, looks like it's in the hands of the bulls. But my concern is to see it coming, the turn. And that starts on lower time frames, 15 minutes, 10 minutes, 5 minutes. I just showed you earlier 1-hour chart, 2-hour charts. It looks like, hey, the bears have some control, right? So that's the point I'm looking for. So let me switch to a chart that I shared this morning. I switched it to 4 hours. Okay, so this was the day before. Let me see, 2 hours. Okay, so at the beginning of the day, we were here somewhere. I thought this was a possibility, or the support. I said there's going to be a battle between these two lines. Well, they opened, immediately lost the support and went to the secondary level of support. These are 2-hour charts. So half the day they held, and then they let loose. Throughout the day they had recovery opportunities. And then they said, screw it, we don't want any of that stuff. And they went. So now they fell into a cluster of support, which is a viable support. And there's below it more support. So my point is, I'm not so worried about the levels, but as to the behavior of, hey, look, lower highs, and it's creeping up the time frames. It was on the 5 minutes, then the 15 minutes. Now I'm looking at it on the 2-hour time frame. It looks like, lower highs. Luckily, there isn't lower lows yet. They're trying to hold the line. So at some point, the battle is going to come into a pinch between lower highs and the floor, kind of like this, and then they're going to have to decide bounce or correct hard. So that's the control I'm talking about. And so far, It's under control, pun intended. So the bulls have the overall control. The bears are trying. They're trying to make some sort of a headway progress in that direction. So there isn't evidence yet. The Nasdaq got hit really hard. That's because the gigacaps in there, like Tesla, is now big. These are leaders. Apple was down 2.5%. That's 15% of that is directly impacted to QQQ. So 40.4% of the QQQ losses is Apple alone today. So you can't avoid damage when you have that much weight in one place. What I want to get across is that watching ticks, this is a red tick, creates emotions. In order to neutralize that and make sane decisions is to look at levels and say, okay, we're here, we're red, we could get here, then what? So in this case, I would be a buyer. A big daily pivot right there. If you look across, it's been in play for a long time. So it will come back into play. The machines don't forget this. I think there's support at 307. I think there's support all along. The RUT, IWM, those are the small caps. They're still, look, all-time highs. What? All-time highs. Today they were up 1%. Here. Today, is this a daily? Yeah. So today they were here at one point. They closed here yesterday. They were up here today. They almost broke out from this lower high trends on the daily chart. They didn't. Maybe they'll try again. We still have higher lows. Control. So at what point in time does control get lost and go by the way of, now we're going to a 4-hour chart. Is it on a 60-minute chart? So it's still not clear. We still have higher lows, lower highs. They're going to come to blows soon. So that's the thing. So speaking of what happens and what has happened before. So this is the daily. I'm going to go to a 2-hour chart and I'll show you something specific. Now it's going to get noisy with the lines. All right. So I did something. This stint, we had a correction, a bounce, correction. We had a few red ticks, a bounce, a few red ticks, deeper, and a rally. So I copied, I quote, ghosted this price action, tick for tick, from high to low to the high to the low. I stopped here and went to the here and here. And I moved it over to this drop from the day it dropped here. So look at this. From this point to this point is exactly from this point to this point. And then they bounced and fell deeper. And then they bounced and now they're falling. So could we fall deeper? So what I'm saying is, even if we fall deeper, we get into this bubble, which I drew it before. Look, it's the same bubble. Just move it over, right? So even if we go down to here tomorrow, this is what happened after last time this happened. Drop, pop, drop deeper, rally. Drop, pop, almost exactly. Drop deeper, rally. I don't know if they're going to drop deeper. I'm saying even if it does, it just happened. So it shouldn't be a decisive factor saying, this is it. Elizabeth, the big one. I don't anticipate. I want to see the price action, who's in control of it. By the way, lower highs, an expanding range is a bullish thing. They say buy the third touch or whatever it is. So this is an expanding range. Let me see if I can do it here. I don't know what's on this one. I was explaining a credit put spread situation for somebody. Okay, so this range is expanding that way. In an ascending market, this has a positive outcome a lot of the times. All you need is just to break out from the trend and they run. They take it another leg higher. They try to copy whatever happened on the way up here. So it's not game over. It's just a few red ticks inside of a bullish ascending daily trend. And I should keep everything in focus. I'm not rah going to the moon guy. I'm trying to put some perspective into an emotional day. Today, if you owned a lot of calls, it felt really bad because the calls got decimated today, right? That's why I don't like to say, if I suggest a trade setup in 3 or 4 different ways, buying naked calls would be the least thing I like. Occasionally I do share that, like with Rocket, because I didn't feel like I was getting anything by selling below it. But generally speaking, buying a call spread does that. Spreads the risk. it limits the upside, but the benefit outweighs, in my opinion, the limitation. That's why credit put spreads work. Okay, so this concludes the portion of the big picture. Nothing has changed from yesterday except sentiment, how people are feeling about things. And the price action should continue to go as it has been, where the buyers are eventually buying the dip. What level matters? So if you wanted hard levels, now we're talking specifics. I can offer on the SPY. The first level I look at is 378 for a very simple reason. Look at it. This flash crash up was 378. This dip was 378. It's going to come back into play again right there. This candle. In fact, take the edges of that candle, because this one matches up with this and this, thereabouts. So 362. There are support levels everywhere. We've gone through them. All right. So now I have to address a few questions I got. Tesla is a falling knife, and it's a popular stock. It's down 4 or 5% today. It felt like, oh my gosh, the pain wouldn't end. Well, guess what? The control is up for grabs. The bulls don't have control of it yet. Yes, it looks like higher lows, but even on a daily, I can, for at least a month, I can make an argument that, lower highs, okay, it has a floor. If they lose 615, whatever that tick is, technically it should come to here. But if it does come to here, that's a floor made of cement reinforced concrete. It was a complete breakout from November, like a game-changing breakout. If you this doesn't happen by mistake. There's a huge conviction. And this range is solid, I think. So I would start looking long anywhere below 560, like serious longs. And I'm not a fan of the company. So, but losing this technically would embolden the sellers, and they could come out in full force. I think this has to come with a complete debacle in the markets as well. So that's Tesla. All right, so let's talk Apple. Apple has solid floor below it. Anything around 115 should be bulletproof. I say that nothing is ever bulletproof. There is a gap all the way down to 95 or whatever that thing is here. Remember how it sliced through when they said we're going to split? That's the only stick in the mud right there, is how they went from disaster, how they came short from 100 before the split or after the split. And then they fell apart. And then, well, I don't like these things. But from all this price action, this is a volume profile bulletproof vest right here. That's Apple. Google is still in great shape. So let's go to the other beast, Amazon. So Amazon falls 40% every year, almost. And it changes nothing. It's a buy to dip company. Wherever, if I'm long, I don't add. But may have triggered something nasty today, but it has had good supports all along. So if it falls to 2800, then I will take a conviction credit put spread on it. Right now I can test the credit put spread with a tight stop. So I can try to get long or a debit call spread. If I do, I make it out in time. So that's Amazon. Facebook, I haven't even looked at Facebook. Same exact comments, exactly. Boeing today made a great move, so I wouldn't even mess with it because it had a good day. I don't know how it closed up 2.5%, but it was almost 235. Not almost, over 235 at one point. So it was a good day for Boeing longs. Let me see here. Square. Okay, so that's another hot topic, Square. If you felt like you missed it up here, then it's worth a shot. I was long it for a half an hour this week. Not kidding. I was long it for a short period of time. I sold the put spread on a bad day, and then it rallied, and I closed it for 50% or maybe 80% of maximum gain. So I left money on the table, and I'm glad I did, because today would have taken all those back. I could have resold it today. I didn't. Okay, I chose something else. So ARK has been in the news for a long time, right? So that's the investment company that scares the bejesus out of me, because it's people are trading it like they're gods. So they had a great call with Tesla, but they're not foolproof. But they do have a product that's pretty cool. They have several ETFs. They're all aggressive. If you read their websites, they tell you right there, They're all aggressive. They're all about, they only invest in innovation. That's what they say on their website. They're all their eggs are in one basket. And it's innovation, not innovation. Byproduct is innovation, but disruption. Disruption is their word. So that brings innovation. You can't disrupt by not introducing something new. So I looked at them. I was like, you know what? A blanket catch the falling knife on all these great companies we just talked about is ARC K, because in it, the top 10 are names I recognize. Tesla is number 1. Spotify is in there. And they're all good businesses. So it's not the battery companies or the electric vehicle companies that don't have any income. They might be in there, but 50% of the weighting of this thing are legitimate companies. Let me go get you a list. Okay, so we have Tesla, Roku, Teladoc, Square, CRISPR, Invitae, I don't know this one, Baidu, Zillow, and Spotify. Those are legitimate companies, and they amount to 46% of the whole bag. I'm okay doing that. So this was my first test of the ARC bunch, and I've been a antagonist for a long time on it because of what they're doing to the market. They're like creating this way of trading that's pretty dangerous. Put all your eggs in one basket, but I don't mind taking one vehicle of theirs. I looked into ARC K. I'm like, you know what? It's lost enough, but also as a sobering moment, the drop in the S&P was 3%. It's 22% here. That's why when you say put your eggs in one basket and it's an aggressive basket, it makes it dangerous. But if I wanted to get long Tesla, but diffuse the Tesla effect, this is 10% of it is Tesla. So I'm taking a small chunk of Tesla here without being completely exposed to Tesla, just to name one. I'm not recommending this as the solution, but it's one way to, quote, catch the falling knife. And it's an aggressive way. So if the market's bounced, this one will bounce really fast. It should, because so far it's moved 5 times as fast as the S&P. So other things like JMIA, which is, I believe, the Amazon of Africa. Good company, ran too far. I was long it. I closed. I didn't catch the very top of the bounce or rally, but I was happy closing. Well, now I look how close it came to telling me, hey, go check it out. Credit put spreads. That was it didn't fire. That dashed line was the trigger for me to go check it out. Is this the bottom? No, I think it could fall here, and it still wouldn't change a thing. 38 wouldn't change a thing. This was the base of the last rally, so that's just another opportunity. We talked about Square. PayPal is probably in the same bucket. Did I show Square? I don't remember. So PayPal is technically in danger, but it's back to the base, the pivot line, the breakout point. That's what I'm trying to say. It just broke out from here, right? Came back and tested it 1, 2, 3, and this is the 4th time. If they lose this, they go to 240, in which case it would be a buy the dip opportunity. So I'm going to put it right now because I'm doing homework. I have to reset all of these, a whole bunch reset. And I'm going to say here, tight stop, because if it fails, it triggers bearish. So if I'm long, I want a stop loss, that's where I'll stop loss. Anything lower than this could bring sellers to bring it to here. And here, I will credit put spread plus, meaning, hey, that looks pretty dang solid. Down here, get long, and that's code for me to get long big somehow. So we'll see what happens at the time. But this is homework. Okay, so Square, I don't remember putting up the chart. So similar situation. It's fallen into a contested area. It makes no sense to go all in. I haven't reloaded my long. I had long. I closed it yesterday, and I haven't reloaded. So I was patient on this one. I won't chase the banks. In fact, I'm short Goldman Sachs. I'm regretting reissuing the short. It was green. I booked it and I reopened it. So the reason why is now it's starting to trade like Bitcoin, because there was a headline that they reopened their trading desk for Bitcoin. So I noticed today that it's mimicking the Bitcoin action. I'm going to monitor that for a couple of days. I have until early April to change my mind, so I'll see. Okay, so when I say short, I'm short a bear call spread. I'm not short the company. I'm not an idiot. So that's on that front. Now there's a whole slew of companies like Zoom under fire. I can't touch Zoom because of my concerns, which I've voiced before. First of all, technically, if they lose this, they can go back to 225. No, I'm not fear-mongering. It's actually lower than this, but I'll stop there because of this little consolidation. My fear is that this next report is going to have to roll over some pretty strong comps from last year. So this next report will have a full quarter of COVID performance numbers from last year. This report had huge increases year over year because it didn't yet roll over COVID performance from last year. It only had a couple of weeks in February, right? So the next one will have almost full 3 months of actual COVID performance, which means people have started using Zoom in droves. And this time, will they be that much bigger than last year? I don't think so. It might spook people. Doesn't change the fundamentals of the company. It just might spook people. So I wouldn't touch it. I shouldn't say that. I would be leery of it. So snow. It's raining. It's falling. Snow. Reported after hours. Oh my gosh. So it had a tough day going into the earnings, down almost 9%. And then the earnings, they took it down even further. The low was 227.5 here. Not a coincidence. Look at where 227.5 is, the base. So what they decided to do, the management, is, hey, you know what? We're going to suck so bad. They missed sales, which is unforgivable for a growth company in my book. They guided lower, which is unforgivable in the market's eyes these days. Guided forward sales. And they missed earnings by 300%, which that part I don't care about because it's a young company and it's aggressively growing according to them. So the fact that they're bouncing after hours and it's at 241 is a miracle. So here's the thing. If indeed it goes green tomorrow, maybe it's telling me that the VIX is lying. Because if they buy trash company like this, and I'm calling it trash because of the report they just delivered, then they're not really scared. Because a scared market doesn't buy trash. So that's my opinion on snow. So if I'm long, it's too late to get out because I'm back at the base. Why would I get out now, especially if I'm long for the long haul? So if I sold the put spread and it's completely underwater, I would punt it to buy myself some time without increasing the risk. I may even take shares if I can and sell the protection leg to make my break even lower. So there are plenty I can do. Let's see here. I don't chase the gambling pushes. I don't chase whatever I hear on TV because most often if they're saying it, they're already in it and I'm simply making them money by chasing it. Like the Nigerians. I mean, they might be decent people, but when they say options, unusual options activity, they're already in them. And then you go chase them. You're just increasing their profits. They bail and suddenly you bought somebody else's profits and you get stuck. Sometimes it works. Most times it doesn't. All right. So this is 23-minute video, but I wanted to use the first 5 minutes or so to lay the fears, to put some perspective over what happened today. That's the best way of saying it.